Hi, everyone. Welcome back to the Thinking Crypto channel. I have a very special guest with me, Hester Peirce, who's a commissioner at the SEC. Hester, it's an honor to be speaking with you today.
Tony, it's a delight to be with you. I have to start, of course, with my standard disclaimer, which is that the views that I represent are my own views and not necessarily those of the SEC or my fellow commissioners.
So, Hester, let's start with your background. Where are you from? Where did you grow up?
I grew up just outside Cleveland, Ohio, and I love living there. I'm a big Ohio fan still. It's where my heart is still. And now I live in DC.
Very cool. What did you want to be when you were growing up? I'm sure it wasn't commissioner of the SEC.
No, it certainly wasn't that, although I did dream of becoming a securities analyst. Even when I was in elementary school, I loved just tracking the stock market and just thought it was fascinating to think about how you would value securities. But of course, you know, as a kid, I had lots of other dreams and hopes and thought I might play the flute professionally, which definitely wasn't going to happen. I'm not that good at it. I had lots of other ideas, but here I am.
Awesome. And before working at the SEC, what did you do and how did you end up at the SEC?
So I went to, I studied undergrad, which I went to Case Western Reserve in Cleveland. I studied economics, and that was a life-changing course of study for me because it really made me think about everything through this new lens, which was really eye-opening. And so I loved economics and thought about potentially going on and getting a PhD in economics, but I don't love math, so I thought about, grad school, law school, ended up opting for the law school route, and figured it was a way that I could incorporate a lot of economics into what I was doing, but not go full on econ. So after graduating from law school, I went to DC where I did a clerkship for a judge, which is a pretty common thing for law school grads to do. And then from there, I went to a big law firm, and that law firm did a lot of securities work, which is what I wanted to do because I thought it was a nice combination of this economics, interest in the markets, my securities analyst desires from my youth, it combined all of that. And so I ended up doing lots of different kinds of things. And then because so many of my colleagues had worked at the SEC, it seemed like a very natural place to go because you really can't understand the agency unless you've worked inside it, is what I realized. And so that was where I went. I spent some time, 8 years at the SEC on the staff. Then I left and worked on the Hill for a little while. Was there during the financial crisis, which was a pretty crazy time to be working there. Pretty crazy time for everyone everywhere, but it was a good opportunity to kind of learn more about how the financial system worked and didn't work, and then I went from there to George Mason, where I worked on writing about financial regulation, and then got the opportunity to come back as a commissioner.
Well, I, for one, am certainly glad you made your way to the SEC because you are certainly one of the advocates for cryptocurrencies and I think one of the forward-thinking folks there. So I did want to ask, how did you first come across Bitcoin and cryptocurrencies and what was your aha moment?
Well, and I should say I'm not an advocate for any particular asset class. I'm an advocate for people having the ability to invest in the asset classes that they deem valuable for whatever their end objectives are. But I first heard about Bitcoin when I was at George Mason. Some of my colleagues were working on issues related to Bitcoin, and I just found it fascinating. I'm a big believer in the power of decentralization just generally. I think it's a really important way of bringing people's talents together to create something. And if you can actually pull from, a dispersed talent base, and that's something I think decentralization does really well, then you can build something really interesting. And so Bitcoin fit really nicely into that. So frankly, after my colleagues started to tell me about it, I was really intrigued right away. And so I followed their work, and then knew that when I was coming to the SEC, I joined the SEC as a commissioner in January of 2018. And that was just about, obviously the ICO boom had already happened, but there was a lot of interest, for example, in an exchange traded product built on Bitcoin at that point in time. So I knew that it would be something that would take some of my time when I went to the commission.
Got it. And what are your thoughts on the community giving you the nickname Crypto Mom?
I always loved the idea of being a mom, and I'm not a mom in the real world. So being a mom in the virtual world is not a bad thing at all.
Got it.
I do have to underscore though, and I like to make this point, regulators are not supposed to be your parents. We as regulators, our job is to set the parameters within which people operate. And it's really important for us to underscore that you and I, when we operate in the markets, we have to exercise our own wisdom, our own, take advantage of our own experiences, know our own limitations, understand what our end objectives are. We have the best ability to take all of those insights and experiences and decide what's right for us and what's not. We have an obligation. And so I think it's really important to say, regulators can't be your parents. They're not going to make your decisions for you, and they're not going to bail you out when you run into trouble.
Absolutely. Well put. I think,
so,
yeah.
With that caveat, I like the name.
Got it. So I have to ask, do you currently hold any cryptocurrencies? I'm assuming.
Yeah, no, I get that question a lot, and I can't hold crypto because of the role I'm in. There are limitations on what we are and aren't allowed to hold. So I'm in a position where I can't hold any.
Got it. So let's talk about crypto regulations. I love living in the United States. I think it's the best country in the world. Love the freedoms. But I feel like we are lagging behind. It's just my opinion, and probably others share it as well. I see in Canada, Bitcoin ETFs getting approved. I see certain companies saying, hey, we're going to leave the United States. From your perspective, where do you see us at? And do you see us making progress this year? Could this be the year, okay, the United States can move forward?
Yeah, I have the same feelings as you. I think the US is the best country in the world, and it's a country that is supposed to be all about freedom and all about the ability of people to experiment with things. Some will succeed, some will fail, but it's this idea that you're going to bring the best and brightest from all over the world to come here and build things. And I want that to be the case. I think we have missed the boat a bit on crypto. And I think a big piece of that comes from the failure to provide clarity in our rules. And, it's funny because there's one narrative out there that, everyone involved in crypto is just trying to do things extra legally outside of the legal system. And in reality, what I hear from people is, hey, we want to comply with the rules, but you really need to tell us what those rules are, because otherwise, how do we comply with them? And so I think that that's something that's really important for us to do. Am I optimistic that we're going to finally get to the point where we do provide more clarity? I think we have a good chance. So we'll see what we do with it. We're likely about to get a new chairman, Gary Gensler, who had his hearing in front of the Senate. That's one step in the process. Then he has to get voted on. And if he does get confirmed and come to the SEC, he brings with him really deep knowledge of this asset class, and he's been at MIT, so he's really been surrounded by people who are enthusiastic about this technology and who are really working hard to build stuff with it. So I think he gets the need for clarity because he gets that there are positive things coming out of this. And so we don't have to convince him of that. And I think that can be very helpful.
Yeah, absolutely. I've seen the videos of Gary talking about Bitcoin, Ethereum, Ripple, XRP, and so on and so forth. So, there's so many things I feel, and everybody feels the SEC has in their hands for this market to move forward. And that's like an ETF. There's also the security or not security situation. You look, at one point, this market was in its infancy stage. Nobody knew what was going on, and regulators and everybody in the world has to adapt. Where is the SEC today, given, okay, there was 2012, 2013, 2014, and where are they now? Where are you guys now? As far as, okay, there was a period where companies didn't have clarity, didn't know what they're doing, but how do we make sure we are fostering innovation without hurting them at this point?
Well, I think it's a difficult question because a lot of what's happening is happening so quickly that it's, we're having to learn about it, and then things are changing fast. You look at what's happening in DeFi and things are really happening extremely quickly there. There have been, unfortunately, some people, as there always are, right, who have taken advantage of this situation and have done bad things and in the name of crypto. And so there's a little bit of that still that we have to get over at the SEC, reminding people that it's not all bad, that there's good work being done, and people are really thinking of building things that will be socially beneficial instead of just taking people's money. So that's one piece of it. I think we have now an office that's dedicated not just to crypto, but to financial technology in general. And that office is kind of designed to be a little bit of a portal where people can come in who are tech people, fintech people from the outside, and they have an idea. They can come talk to people who really speak their language. And then those people can be a translator to the rest of the agency. And that office has recently been elevated, so it has a higher status in the agency. It's got more pull, I would say, in the agency, and that's positive. And I think that, people, a lot of institutions now are coming in and saying that they need more clarity around custody, for example, investment advisors and broker dealers trying to deal with this, trading platforms thinking about trading these things. So I think there's a greater appreciation of the interest in this asset class. But I think we still face the challenge, right, that all of this meets the traditional securities laws, which are designed purposely to be very open-ended.
Sure.
And the goal there is that we want to make sure that anytime someone's going out and saying we're raising capital to build something, that we're capturing that within the definition of security. And so the definition in the US is a lot more broad, maybe, and less constrained by clear lines than it might be in some other places. And that has led to, ambiguity, not only with respect to crypto, but actually with respect to a lot of other things, that you might be selling something and doing it in a way that makes what you're doing a securities offering, even though what you're selling is a piece of land or, many other things, can be whiskey barrels, all kinds of things. If you sell them in a certain way, it could end up being a securities offering. So that has led in the crypto space to a lot of angst, really, because people are trying to figure out, well, how can I do a token distribution without running into the securities laws?
Sure. And, but by all means, the SEC you guys are doing your job. It's important to protect consumers and investors and so forth. But is there now, and I'm curious, you could take us behind the curtain, is there dialogue saying, well, we have this Howie test, but maybe there needs to be a Howie test 2.0 to treat digital assets and crypto differently to a certain degree? I understand, once again, the ground foundation is protecting investors. is there a dialogue happening about that? Well, we need a Howie test 2.0.
Well, there's a dialogue, but sometimes I feel like I'm a little bit dialoguing with myself. So, I mean, I think people are starting to realize that, and I can't speak for anyone else at the SEC, so I just underscore that. I think people are starting to realize that, but at the same time, the Howie test has worked relatively well over time in a lot of different contexts. And so it did take me, when I first came to the SEC, I looked at it and I said, you know what, Howie should be able to accommodate crypto as well as any other kind of asset class. It took me quite some time before I said, I'm not so sure that we can use the framework that we've used for everything else for crypto. And in fact, I'm not even sure that the kinds of disclosures that you get in a securities offering are really the kinds of disclosures that a purchaser of a token would want or need. And so I think that this is a conversation that I want to have with Gary Gensler, if he's confirmed, to just say to him, look, I think we need to do something here because I think there's something different about this space that makes it uniquely difficult to try to use the Howie test. But I think that's not necessarily a widespread view. So I don't want to oversell my position. That's the reason that I put out the safe harbor, is because I came to the conclusion we need to do something here that both addresses the legitimate concerns, which you said, right? I mean, the legitimate concerns about protecting investors and consumers. In this case, if you're a token purchaser, getting those people information that they can rely on to make a decision about whether to buy a token makes sense. And maybe we don't even have to ask that securities question right away. Let's just get them the information they need, let things play out, let the network develop and build over time, and then we're not going to have the securities conversation. So it's kind of like an end run around having to do the Howie analysis.
Sure. And, William Hinman, who I believe he's not at the SEC anymore, but
Right.
he had, I think it was on Yahoo Finance or something like that. He talked about a project can start as a security, but over time evolve to a non-security. So that I believe is in line with your safe harbor proposal?
So that is kind of what got me thinking about doing something like that, is this idea that something could transform. Now, I'm still thinking and I'm still learning, and that's why I always welcome feedback from people, because I do sort of rethink these things. And one of the things that I've been rethinking is, when we tend as the SEC to talk about the token itself as being a security, and that's really a shorthand, because what the question really is so like a stock or a bond is a security, but a securities offering can include an investment contract, which is what Howie's all about. And so it's not that the thing itself, the Howie case, for example, was about orange groves. It's not that the orange groves themselves or the orange trees or the oranges were a security. What we were saying is the way that you sold those pieces of the orange grove, it was a securities offering because it was an investment of money. You were looking for profits based solely on the efforts of someone else. That's what a securities offering is all about. And so instead, what we've done now is we've started to say, well, the orange groves are kind of like the security. And so if you sell a piece of an orange grove as in a securities offering, then it continues to be a security, the orange grove piece itself. I think it's better if we really look at the offering as a whole and we don't try to treat the tokens as securities, because once you start doing that, then you get to the question which you're raising, which is a good one. And this is the one that Bill Hinman tried to talk about too, which is that at some point you've got to try to figure out when does it flip from being a security to a non-security, because obviously a token in a functioning decentralized network, where the token is really the coin of that network, the coin of the realm of that network, it doesn't make sense to treat it as a security because there are all kinds of rules around transactions and securities that just aren't really very apt in a network. It would be very awkward for you to have to go through a broker dealer to do a transaction, or to have to do a transaction on a securities and exchange, or we have sort of exchange lights that you can use for securities, alternative trading systems. You wouldn't want to have to do that every time you transfer a token. And so that's where I start to think we need to take a step back and stop thinking about the token as a security itself.
Sure.
So it's a little bit more of a nuanced view.
Absolutely. Now, there are thousands of projects in the crypto industry, and it's every day there seems there's a new one. Is the SEC prepared to handle that? I mean, obviously, I know your agency is big, and you mentioned you built out a crypto division. And there's so many projects that are waiting for the green light, or, what should they do, and so on and so forth. What's the next step here for you guys, in enforcement and making sure the good actors are protected, but the bad actors are weeded out?
Well, so first of all, I don't want to oversell. We don't have a whole division for crypto. We have a fintech office.
Got it.
And it's much smaller than our big divisions. The SEC has about 4,600 employees, and we do a lot of different things, most of them not crypto. So I think that's one important thing for people to remember. It can sometimes be frustrating because the SEC seems to be, moving slowly, but you've got to remember there are a ton of other things that the agency is doing. So in terms of, can we handle the volume? So FinHub, this fintech office, will have conversations with people who are building stuff in the space, coming in, asking questions, maybe asking for relief. The staff can give relief called no action relief, which basically means if you do things in a certain way, you follow certain conditions, we're not going to haul you in and recommend an enforcement action against you. So that provides some comfort for people. But the thing is that those do take a lot of time and bandwidth from the agency staff. So I think that's why your question is a good one, because realistically, that's not going to happen for every project, for every individual project. And so that's why I think a model like the safe harbor that I proposed is a better model, because it's one that says, look, here's what you need to do if you want to rely on the safe harbor. All you need to do is raise your hand, say you're relying on it, provide these disclosures to people, and then willingly agree to be subject to our anti-fraud rules. So if you do those things, you don't have to come in and ask for permission. You're just affirmatively taking advantage of something that's available to everyone. I think that's a better way to create kind of a level playing field too, because it's really expensive to come in to engage in these discussions with the staff. And I'm not dissuading people from doing it. I think it's good for people to come talk to us. But I'd like to have a solution that took less time on the part of projects and less time on the part of our staff to allow things to move forward. But I think another important point is that, and this is one that I think people are often frustrated about, is we don't generally issue like a stamp of, hello, this is not a security, kind of a label that you can slap on your crypto project. That just isn't how it works. And so I think people need to understand that as well.
So on that note, to your point, and I know there's not much you can talk about with regards to the Ripple lawsuit, but in that situation, you can't just outright say, well, this is not a security. It has to go to a court. Is that the dynamic of how the SEC works?
Well, so the way that again, if it's a stock or a bond, there's certain types of things that clearly would fit within one of the defined buckets of what a security is. The investment contract bucket is a little bit more ambiguous. Okay. And so we do expect, the obligation is always on the party doing something to think about whether that something is consistent with the securities laws. That's just the way it works. We don't, we don't live in a system where you've got to come ask the SEC for permission before you do something, but we expect you to think about whether you're covered by our rules, and if so, how to do something in a compliant way. And I think that's generally a good approach, right? Because it means that there's not a long line of people waiting to get permission from the SEC to do stuff, but it also means you better have good lawyers and really think about what you're doing. So it has its pluses and minuses. But in terms of, look, I mean, I as you said, I can't talk about Ripple because that's an ongoing litigation. But I think it's important for people to understand too that, we've brought a number of cases in this space. Typically, they either have a fraud component and a Section 5 component. The Section 5 is a registration violation, basically saying you did a securities offering without properly, without it being a registered offering, which means it's a public offering, or relying on something that allowed you to do it in a private way. So there are a number of exemptions that people can rely on. And so there have been, each case is different, but I think it is important for people to know that the way the SEC works, so I'm one of 5 commissioners. Typically, we're down to 4 now because we're waiting for our a new chairman to come in. But we are actually the ones who vote on new rules, and we vote on enforcement actions. And so there's a lot of work that's done by our staff, and then they'll make recommendations to us to say, hey, we think you should adopt this rule, or we think you should bring this enforcement action. And so a lot of that stuff is it operates at the staff level and then just comes up to us when there's a decision to be made. And the decision might be, hey, we think that you should authorize us to bring this enforcement action, and you should agree to a settlement that we've negotiated. So those things often happen together. And that's something that I think the SEC can be a bit of a black box in trying to understand how these things work.
Sure. Yeah, I know a lot of people speculate on that. And I've spoken to Chris Giancarlo, Crypto Dad, recently, and the CFTC, he's a former chairman. CFTC views it as crypto as commodities, and you have FINRA, FinCEN, and so forth. How do we get all these agencies to be on the same page? Is there like a congressional hearing that needs to happen to say, okay, this is how we're moving forward. SEC, this is your position. CFTC, this is your position as it relates to crypto.
Well, so generally, each agency is bound by its statutory framework. We have our set of statutes. CFTC has its set of statutes, and just because something is one thing for one particular agency under its particular statutes doesn't mean that it's not something else under some other agency's statutes and rules. So I think that too can be a bit confusing. And in terms of, the federal financial regulatory structure in the United States is quite complicated. We've got lots of different agencies. The CFTC and the SEC share regulation of the capital markets, which is a pretty unusual structure for to have 2 financial regulators in this space. But then there's a whole host of banking regulators. And then we also have a whole set of state level regulators. And so there are a lot of potential people interested in any kind of space, but especially one where, sometimes it might seem to fit within the security space. Sometimes it might fit within the CFTC space, or maybe it falls within the FTC or the CFPB, which are other agencies. And the White House obviously plays a coordinating role for the executive branch. But the interesting thing about the SEC and the CFTC is that we're independent regulatory agencies, which means we're governed a bit differently. That's why we have this commission with 5 members, and we're responsible to Congress. The commissioners are confirmed by Congress, and we have accountability to them in a little bit of a different way than some of the executive agencies are organized. So it can be pretty difficult to try to herd all of those agencies. But I do think that we should give some thought to trying to create some kind of cross-agency sandbox, for example, something like that, that would allow people to come in and get some guidance. So I think that an idea is to have a sort of cross-agency safe sandbox that would allow people to come in who aren't sure which agency's jurisdiction they might fall under, and allow some kind of experimentation. I don't think it will be easy to design that because of the fact that some of us are these independent regulatory agencies and others are executive branch agencies, but we do work together all the time. Treasury does a good job of coordinating work across different agencies in the financial regulatory area. And so I think there would be a possibility of doing that. We also work together with our international counterparts, and a lot of that work is just trying better to understand, how are you approaching this issue? How are you thinking about this? And I think that kind of thing can be valuable too, especially because a lot of these projects involve US persons, but also involve people in other countries. And so trying to come to some kind of common understanding of how we're going to deal with these international networks could also be helpful.
Yeah, absolutely. Personally, my ideal vision would be FinCEN, CFTC, SEC come together, and there's some just collaboration, putting your heads together and come out with something new. How do we treat crypto? Because FinCEN will say one thing, CFTC will say one thing, your division will say something. Yeah. What do we do here, right? It can be confusing.
It can be difficult. And I think we also have a lot to learn from each other. I mean, look at FinCEN was very early in addressing some of these questions. And I think a lot of people were pretty happy early on with FinCEN coming in and laying out, saying, look, we're going to treat these as money service. I don't know all the lingo of the FinCEN, but they put out guidance early on. You look at CFTC, they confronted this issue of, can we have futures markets with underlying crypto, and they addressed that issue very early on. And again, their rule set is different, and the way they approach their products is different, but still we have something to learn from them. They set up very early on an office that really was designed to interface with innovators. That was something that Crypto Dad did early in his tenure. And then you have an agency like the OCC, where Brian Brooks was head of that agency, and really came in with a realization that this technology is going to change the way a lot of things are done, a lot of the way payments are done. And so he sort of set the groundwork for entities that they regulated that wanted to experiment with this stuff to be able to do so. So I like the idea of kind of bringing the different regulatory agencies together, not only so that we can provide more consistent guidance, but also so that we can learn from each other. But again, I would underscore that because we have different statutory, each agency has a different statutory framework that it's implementing, you could still end up with situations where something does fall under the jurisdiction of two agencies. One other point you asked about is, should Congress be doing something? And certainly Congress, there are a number of members of Congress, both in the House and in the Senate, that are quite interested in this space, and I think have floated some ideas for trying to provide some more concrete, tailored guidance more than guidance, directives in the form of legislation to agencies like mine about how to approach this. And I think that's fantastic and that's helpful. And again, without speaking to any particular piece of legislation, but I think their interest in trying to provide some more framework, a more clear framework, is great. And I think the potential for Congress to say, hey, we're going to set up some kind of cross-agency sandbox type thing, that could work as well.
Awesome. Fingers crossed we can see something like that soon. So I wanted to just circle back on the security question, given that, look, there was a wild, wild west days of the crypto market, kind of like what there was with the internet, right? But everyone's catching up. The regulators, your division and so forth are catching up. Would the ideal scenario be, okay, there's many different crypto companies, they have tokens, they may not have done things according to the Howie test back in the day. Would the ideal solution be like pay the settlement for X amount of years, whatever it be, 2012 through 2014, but now you're okay, just make these adjustments and let's move forward? Would that be an ideal scenario for the majority of the projects in the crypto industry?
I mean, when we talk about enforcement, it really is a case-by-case determination. It's looking at the particular facts and circumstances. And you have seen some settlements with projects that have basically said, okay, well, you pay a penalty, and this is what we expect you to do going forward: either register the securities, or figure out some kind of a solution along, or in some instances we've said you can't distribute the tokens at all. Now, I've had some concerns about those kind of settlements because I don't know that really achieves the best outcome for people involved. So I've been outspoken in my concerns about some of those settlements. So I don't know that there's one really easy way to do this. I mean, I think we take the position that if you're doing something that you think might be a securities offering, you really need to figure out whether it is. And if it is, you really need to do it under the different options that are out there. And so you've seen, for example, some have used Reg A+, which is, so Regulation A+ is kind of a way to do a mini IPO. And some people have found that to be a workable approach. Some people have used, have raised money through going to venture capital, for example, and getting investments from them early on. And then this is where I get concerned, because then I'm thinking, okay, well, when they want to do their token distribution, can they do it in a way that's compliant? And that's, again, a place where my safe harbor could come in handy for a project that has raised money privately, done that according to the securities laws, and now wants to go out and get those tokens into the hands of people who can use them. But so there's no really magic bullet to solve this for everyone. Obviously, in some cases, it's so obvious that there was just outright fraud that it's in everyone's interest for us just to bring a case. And often those projects dwindle to nothing anyway, because the people who were doing them just wanted to get the money and run. They had no intention of building anything. But it's a much harder question when you're talking about a project that actually is trying to build something, but we come in later and say we think that you did a securities offering that was illegal.
You recently, I think it was on February 26th, on my birthday, in fact, the SEC released a risk alert, the Division of Examination's continued focus on digital asset securities. Can you give us a quick overview of what that's about?
Well, happy birthday. I don't know that was issued in honor of your birthday, but I think the idea was just to say, look, these are some of the things that you should be thinking about when you're deciding that you want to get involved with this asset class. So we put out this is an instance where it's the staff that puts out these risk alerts, and it's the staff of the division of the SEC that goes out and examines investment advisors and broker dealers. And so they're seeing lots of different firms, and they're seeing good practices, bad practices, maybe ones in the middle. And so they're trying to put out some guidance of things. Hey, these are things that you might want to be thinking about. These are areas where you might run into trouble. And so they're intended to be helpful to firms. Now, I know I've gotten some feedback on that one that has been not altogether positive, I'll say. And I get why there's some negative feedback on that, because one of the things in there was to say, well, you better do a good job in trying to figure out whether the things that the cryptos that you're dealing with are securities or not. And I think the reaction was, well, come on, SEC, we want you to just tell us whether they're securities. And I get that, but I think that ties back to the prior conversation we were having, which was, again, I think it's difficult to think about the tokens themselves as securities. You have to know all the facts around the offering in which those in which those tokens were sold. And so these are really difficult questions. I do appreciate that there have been efforts in the private sector to come up with sort of ways of thinking about how they can assess whether or not something might fit within the bucket of being considered to have been sold in a securities offering. It's great that people are coming together and thinking about those things and talking about them together. But again, you know, I realize the frustration, and I think it's a difficult area, and it's one we need to do a better job trying to provide some kind of additional parameters so people have something to grab hold of. Now, to be fair, you know, under Bill Hinman, there was a document put out that has, you know, 38 factors that you might consider to decide whether or not something's become decentralized, for example, whether networks become decentralized. The problem is that when people look at something that's that large of a list, they say, well, okay, but we need some help trying to figure out how to weight these different things. You can't just give us all these factors, because we really need to know what you think is more important and what's less important. And so again, that's an area where I think we could do a better job of providing guidance, and maybe that's something that, again, with a new chairman coming in, we can kind of take a fresh look and do a better job at providing guidance.
Got it. Well, I appreciate the efforts and the work you're putting in, and with Gary coming in, we maybe we can move forward in this area. So I want to ask about.
But again, I think it's important for people to understand too that a new chairman, the new chairman comes in, the new chairman sets the agenda for the agency, so the rulemaking agenda. He'll likely bring in some people to the agency to run the major divisions. That's typical. But it is important to remember that a lot of the work of the agency just continues on. The intent of having a 5-member commission is to have continuity over time. Mm-hmm. And so that you don't see massive swings in policy, and you don't see massive swings in other ways as well. And so it is important for people to know that the work of the commission really does go on, and it's not going to change dramatically when a new chairman, I mean, the regulatory agenda may change quite a bit, but the work of the commission, the day-to-day work of the commission will continue on regardless of who's chairman.
Got it. That makes sense. So I want to ask about a Bitcoin ETF.
Everyone does.
Yeah, everyone's itching for a Bitcoin ETF. Is this the year? And you know, what do you guys need to see at the SEC? Is it the custody, the price aggregation? Are those the two tiers, so to speak?
Well, again, this is another area where I haven't seen eye to eye with my colleagues, because I think that we've applied a standard in this area to try to figure out whether to approve one of these exchange traded products that isn't necessarily consistent with how we've looked at other similar products in the past. And so one of the things we've said is we want to better understand the underlying markets. We want to know that there's some kind of a regulatory oversight of those markets. And so people have been playing around with different ways. You know, is there some kind of agreement that you can get to oversee these markets? We've looked at, you know, a lot of data around, does the futures market lead the spot market or vice versa? I mean, again, it depends on what the nature of the product is that someone's coming in and trying to do. You know, if they're saying, that they calculate the Bitcoin price based on a particular spot market. We want to understand that spot market better. So my view is that we really just need to apply the same kind of standards that we would apply to any other similar product, which would not mean that we go in and really have to have this regulatory I don't want to say regulatory authority, but this control over the spot market or understanding of exactly how every spot market works, because I think that's, and I'm being a little bit unfair here in characterizing the way that the decisions, the negative decisions were given, but I really thought we spent too much time trying to get a handle on the spot markets. The real question is, will the product trading in our markets, the exchange traded product trading in our markets, work? And are there things that we're worried about that could go wrong, could go awry? And those are legitimate questions to ask.
Sure.
And I get that this is a new asset class. We're all trying to get our arms around how it works. But at some point, you, I think, have to just move forward and say, okay, we're going to allow this to go. I mean, you mentioned the exchange traded products that are trading now in Canada, and I think that that's, you know, they've decided they can move forward. Their standards are, I don't know what they are. They may be different than ours, but we're also seeing a lot of other kinds of products where people are able to get access to Bitcoin,
Right.
and so things are moving forward, and we don't want to wait too long, because it becomes then much more important who the first mover is if you wait a really long time. So it gets complicated for us too.
Sure. Well,
so that was a long way of not answering your question of whether this is going to be the year. I don't know.
Well, I'm praying this is the year, and we move in the right direction here. And I do want to ask, about your thoughts. Things are just moving at the rapid pace in the crypto market. We have companies adding Bitcoin to their balance sheet now. I've interviewed the mayor of Miami. He's talking about allocating some of the city's treasury reserves into Bitcoin. What are your thoughts on that, and how does the SEC view that? Look, because while Bitcoin is a non-security, that's been made clear. What do you guys think about that?
Well, I think companies and cities can make their own decisions about what they want on their balance sheet. But I think it does, again, illustrate that there is broader institutional interest in this asset class, and it would behoove us to try to allow people to access it in ways that they normally access things through our markets. So I think it just puts a little bit of an extra impetus on us moving forward with allowing some more access through more traditional methods. But again, what people decide to do, what companies decide to do, as long as they're disclosing it to their investors, I think that's a key, especially if it starts to become a material part of what you're putting on, of your company's strategy or what you're putting on your balance sheet. I think those things need to be disclosed, but then it's up to the companies and their investors to figure out whether that's what they want.
Got it. So a few more questions before we wrap it up. I did want to get your thoughts on the situation with GameStop, short squeeze, Robinhood. It seems there's a theme here of decentralization, and it mirrors crypto in a way. Obviously, I don't know if you can disclose what you can disclose, but I want to get your thoughts on that. How is the SEC viewing that situation and future situations like that?
Well, so just generally, I can't speak to the specifics of that. I mean, it was a very complicated set of events, and we're looking at the many different aspects of it. I don't know whether there will be enforcement action based on it. I don't know whether there will be regulatory changes based on it, but we're certainly trying to go back and understand what happened, and then we can think about whether any additional actions are necessary beyond just looking at what happened. But I think on a general from a general standpoint, I'd say, look, retail involvement and engagement in our markets is something that we want to encourage. Our capital markets are there for everyone to use, both as investors and as users of capital. We want people, we want a larger percentage of the population to be engaging in the capital markets, to be building nest eggs for their future and for their children's futures. We want companies all across the United States to be able to draw from the capital markets to build things. Entrepreneurs without great networks of rich friends should be able to get money when they have a good idea and when they have something to build. And that's something that I feel pretty passionately about. I mean, that's part of the reason I wanted to be a commissioner in the first place, because I really do believe that the capital markets can transform people's lives in really amazing ways, whether those people are participating as investors or as companies and entrepreneurs taking capital and building something. So it's a really powerful force for positive change. Now, we always caution people, no matter how you're coming in as an investor, to do so with care, to think about what you're investing in. Again, as I said at the beginning, you got to think about your limits both in terms of time, in terms of resources, in terms of interest. For a lot of people, engaging in the markets through professionally managed funds is going to be the best way to do it. But other people may want to spend part or all of their money and do more work themselves and figure out how to allocate that capital to different companies. But you do have to think about it, especially in a case where the stock is moving quickly up and down and maybe up and then down and then back up again. You have to be thinking about the potential to lose money in those situations. There's always risk that goes on with investing. You need to think about your own risk appetite. What can you handle? If you lost all of this money that you invested, would you be okay with that? I mean, obviously you're not going to be happy about it, but would you be able to move on, or would you not be able to pay your rent? Those are things you really should think about before you get engaged in the markets. And then a number of people have suggested different policy remedies to some of the things that appeared to not work as well as they should have during this time. I want to approach all of those with great care. I want to understand what happened, and we also need to think about the costs and benefits when we make changes, right? Some people have said, well, I don't like the way some broker dealers are getting paid, and those are fair questions to ask, but you have to then think about, okay, well, if we say they can't get paid that way, how are they going to get paid instead? And is that better for investors, or would that be worse for investors? Some people have said we want to shorten the settlement cycle because it seems awfully long. Okay, fine. So then let's just think about what are the costs of getting to a shorter settlement cycle. Is that what we should do now, or are there sort of more intermediate steps that we could take before we really shorten the cycle? Some people have said, well, we can use blockchain technology to build a better settlement system. Okay, let's think about that. And then let's also talk about how many changes that would require across the whole system, and think about when we want to do that, if we want to do that. So all of these things are very complicated, but I would say as a bottom line, there's nothing wrong with having retail investors participate in our markets, and they just need to do so with eyes wide open. Back to my point about not being your parent. I urge you, if you're going to go into the markets, do so with an inquisitive mind. Always ask questions. Never feel like you can't ask questions because you think that people will perceive you as being stupid. Because probably if you're asking the question, other people are asking. And often the people who refuse to answer your questions, they're not answering because they want to do something bad with your money. So when people don't answer your questions, go find somewhere else to invest. I'm not giving investment advice, but I think these are just some general principles to bear in mind. If someone tells you that the opportunity is now or never, you can be very careful in those situations, because there's almost always a tomorrow where you can invest after you've done a little more homework. So I think these are just some, general principles that people can think about. They can apply them in the crypto markets. They can apply them in the securities markets. And it's always better to ask questions.
Absolutely. Great advice. Final question before we go into the rapid fire. CBDCs, we hear digital dollars in the work, digital euro, whatever it is. Is the SEC involved in any way with the digital dollar? Are you guys keeping an eye on that?
Well, certainly keeping an eye on it, because I think it could transform the way that payments work in this country, which then has an effect on how our securities markets work. But it's not primarily our thing.
Sure. Okay, Hester, let's go into rapid fire. Favorite food?
Favorite food is bread, which is so politically incorrect these days, but I love my carbs.
Awesome. Favorite musician or band?
Neil Young's my favorite musician.
Awesome. Favorite movie?
Favorite movie? I'm the kind of person who everyone who meets me compiles a list of movies I have to see because I've not seen any of them. And so I'm always open to getting movie recommendations because I've most surely not seen them.
Got it. Favorite book?
Well, I'll give you a favorite genre of books. My favorite genre of books is biographies because I just think it's fascinating. Everyone has something unique to offer, and I just love seeing how people use their talents to contribute to the world. When I was a little kid, I loved biographies so much, even back then, that the librarian in my elementary school took me aside and she said, "Hester, you may not check out any biographies. You have to find another genre of book that you read." And to this day, I don't understand why she did that, but I still love biographies, so that's still my go-to.
I also am a big biographies, like literally on my phone, the books I've read, like Steve Jobs, Zuckerberg, Anthony Kiedis, and the Red Hot. I love reading people's stories, and to your point, taking away just the nuggets or their perspective, things like that.
I'm reading one right now of Harriet Tubman, and what a fascinating person. Like, talk about courage. I mean, what a motivating book to read. So yeah, it's you can always draw something out of someone's story.
Absolutely. And finally, when you're not at the SEC, what are you doing for fun as a hobby?
I'm usually outside if I can be, or I'm baking bread so that I can eat my carbs.
Awesome. Hester, pleasure chatting with you. Thank you for everything that you do for the markets, and especially the crypto market, because it's a bit of self-interest there, but thank you so much for your forward-thinking ideas and things along those lines. And also, I know it's International Women's Day, so happy International Women's Day.
Thanks. And Tony, it's been such a pleasure to be with you. I appreciate you reaching out, and I'm glad we had a chance to talk.
Awesome.